Only money.
Place your bets, ladies and gentlemen.
Welcome back, everyone. So when you buy a stock during the day, the moment the purchase is made locks you in on price. But how does it work for much more complicated assets like mutual funds and exchange-traded funds? We wanted to know, so we asked. That's the focus of tonight's Money Talks. Some funds settle at the end of the day, and some when they are purchased. Well, let's start with ETFs. Here's certified financial planner Neil Vinoy.
ETFs are bought and sold on a stock exchange during the day, so you know exactly what you're paying when you buy, exactly what you receive when you sell it. We'll trade an ETF, will settle the next trading day, but once you buy it, you see what you paid for it and it's in your account.
So that's ETFs. But what about those mutual funds that so many of us have in our 401ks?
Traditional mutual funds are only priced at the end of the day at the net asset value of all the underlying holdings. So you won't know exactly what the price per share is when you buy it, but you do know you pay exactly what those holdings are worth.
So remember, especially if you are making a mutual funds purchase, on a down day, your purchase will lose a little, and on an up day, you'll gain some.
The fact that traditional mutual funds are only priced once a day at the end of the day isn't a problem for most investors, but keep in mind that if you need to sell something and the market's going down that day, the price you receive per share could be much lower. And alternatively, if it's a strong up day and you're wanting to buy, you can end up paying a lot more than you were expecting because you don't know that price until after the market closes, after you've placed that order.
And once again, rather than trying to perfectly time things, I'll let Neil explain.
In general, it doesn't matter if you're buying on an up day or a down day. Since the future can't be predicted, my motto is always the best day to buy is the day you have the money to invest. Just make sure you know what you're buying, why you're buying it, and make sure it does fit into your long-term investment strategy and that you can hold it through any ups or downs that might come your way.
Good advice there by Neil right at the end. Of course, we have all of these issues today on timing of trades because of computers and the frequency in which we can make trades. It really is amazing and will probably get more and more nuanced in the future. Lindsay?